let's now focus on the budget expectations. And yes, wish list has been going to the finance minister. Budget 2026 is just around the corner. And private equity space, the alternative investment funds, they have really given a huge amount of growth capital as well as investment diversification opportunity in the country. So they have big asks from the finance minister. Let's get some of that from an industry expert. Let me welcome on the show Sriniwasan, who's the managing director at Kotak Alternate Asset Managers. Srini, always a pleasure to welcome you on NDTV Profit. Now, if you have to summarize in the key highlights of the top 5-6 aspects, which are the key demands of the private equity and the fund industry from the union budget this time?
There are a bunch of things that we have asked for. I think the first of them is certainty of taxation, which is, as you know, that private equity funds or alternative investment funds are limited life vehicles, and which is quite different from some of the others who are unlimited life vehicles. So at the end of our life, we need to have clarity that the taxes are completely done and dusted. And we have requested as part of the budget that if the tax assessment of these limited life vehicles on their completion gets done within a 12-month period, it gives certainty to the investors in the fund. It also solves a lot of problems where SEBI is grappling with regard to liquidation or complete closure of funds. And this will give a great relief to both fund managers and investors, because sometimes in anticipation of potential tax liability, fund managers have to retain some money back, and that impacts investors' returns as well. So I think that's the first ask. The second ask that we have made is that between taxation on equity and taxation on interest income or debt securities is very wide.
If I can intervene, since you already expanded on this particular aspect, especially when it comes really at the time when the Tiger Global case in the Supreme Court, which had overturned the Delhi High Court verdict and had been given 7 years after the transaction took place. That particular case has given a body blow to the fund and the private equity industry. Is that particular scenario aimed to be really addressed for future with this big ask coming in from the private equity industry from the union budget?
Well, honestly, from our point of view, we had made this ask much before this Tiger Global verdict came about. And without getting into the merits of the Tiger Global situation, of which I am not fully intimately familiar, the reality of it is that if we can have tax certainty within a defined time frame and not a 7-year period for funds which have actually got completed, it will certainly help the cause of attracting more investments into the country. Whatever disruption that this particular verdict may cause, I think having this kind of certainty would certainly help the cause of attracting more capital into the country.
Right, Srini. In fact, the tax investigation as well as closure and resolution of the matter has to happen very close to the transaction, because funds have limited lifeline and time period, and therefore holding that cash is actually time value of money wise a loss on those funds as well. So that particular point coming out very clearly. When it comes to taxation overall, there is also a big ask of parity between equity products as well as the other hybrid debt or other related products. Where are we on that, and what is the big ask coming in from the union budget?
Well, I wouldn't say parity. I just said that, look, the disparity in terms of taxation between interest income and capital gains is actually resulting in misallocation of domestic savers' capital. Today, domestic savers are investing in different kinds of mutual funds, which are technically taxed as equity funds. And that actually is competing even with bank deposits in terms of customer assets. What we are saying is that if you have interest income taxed at the maximum marginal rate for high net worth investors, those investors are not really buying into interest-bearing securities. And that has an impact even on the bond markets in India. If you tax interest at such an usurious rate, compared to equity, then you are not helping the cause of deepening and widening the bond market. We need investors who are otherwise happy to take equity risk to invest in bonds, even if they are lesser rated, because they have the risk appetite to do so. Today, if you look at the bond market, the majority of the bond market is cornered by the AA and the AAA. And the institutions in India are also either by regulations or by risk management, focusing only on the AA and AAA. So the MSMBs, the lesser rated companies, they are not able to get capital or credit capital. And as an alternative investment fund industry, we have investors who have the risk appetite to invest in some of these lesser rated paper as well. And that actually makes a more vibrant, deeper and wider bond market. World over, bond markets are bigger than equity markets. We are not enabling that by having a differential in taxation, which is so wide that it is discouraging investors to invest in credit securities.
So that's the larger picture that you mentioned, Srini. And narrowing it down, private credit is one space which is growing very fast. But this particular area attracts interest income and taxation on interest income, which is much higher than capital gains tax. And therefore, it discourages and reduces the attractiveness of these kind of products. Any specific views on private credit growth and the hindrances there?
Yeah, absolutely. The taxation is one of the biggest hindrance to private credit growth because if, as you know, in India, the category 2 funds, which are private credit funds, they're all pass-through vehicles. And the investors in those private credit funds are domestic banks, institutions, and of course, family offices. Now, if you look at the situation, a foreign investor comes into a domestic private credit AIF, that investor is likely to pay a maximum tax of 15% on interest income, as opposed to a family office, which is likely to end up paying at anywhere between 25% to 35%. And that essentially means that you are handing over the private credit market to foreign investors. That's one aspect of it. The other aspect of it is that you are discouraging the domestic investors from coming in. If it is a pass-through vehicle, you make it a level playing field for everybody to be able to participate, and you are able to commingle both international capital and domestic capital and provide the much needed credit into the domestic market. There is also another school of thought that some people feel that private credit can cause systemic risk. I think that is, at this point in time, too early and probably misplaced, because unlike in global markets, private credit funds in India do not take leverage from the banking system. So it is actually looking at it from the perspective of systemic risk, more of an equity capital. If the private credit fund does not make money or loses capital, it's the loss of the investor and not on the banking system.
Right. Thanks for clarifying that bit. But that anomaly, and by design here, Srini, the equity schemes and funds are made more attractive than the debt, hybrid, and other such instruments. And that parity is very, very required because equity is made much more attractive as an instrument. Finally, and very quick answer on that to explain enabling LLP's structure for AIFs. That's also an ask. How will this help? Quickly.
I think, again, trust taxation has always been a very difficult subject matter. And different regulatory authorities have different views with regard to how a trust is to be viewed from the perspective of borrowing, from the perspective of taxation, and from the perspective of operational ease and efficiency. World over, private equity funds are run as LLPs. What we are simply saying is that let's adopt what are the best practices in other parts of the world, enable the LLPs. There are kinks in terms of taxation at this point in time, which we have made specific recommendation to the finance ministry. Without getting into details, which I'm sure your viewers will find pretty foggy, this is a very important task for the industry.
Right, so some of these could really make it to the union budget speech by the finance minister. Thank you so much, Srini.